In order to improve the governance of public sector banks, the government intends to announce an autonomous bank board bureau. The bureau will search and select heads of public sector banks and help them in developing differentiated strategies of capital raising plans through innovative financial methods and instruments. This would be an interim step toward establishing a holding and an investment company for banks. Madam, I would like to inform the House that we are making good progress on Digital India. The National Optical Fiber Network of 7.5 lakh kilometers, networking 2.5 lakh villages, is being further speeded up by allowing willing states to undertake its execution on reimbursement of cost as determined by the Department of Telecommunication. Andhra Pradesh is the first state to have opted for this manner of implementation. As members are aware, in making a recommendation, the Finance Commission has not distinguished between special category and other states. Moreover, both Bihar and West Bengal are going to be amongst the biggest beneficiaries of the recommendations of the Finance Commission. Yet, eastern states have to be given an opportunity to grow faster. This is what the Prime Minister reiterated even yesterday, that East needs an extra boost. I therefore propose to give similar special assistance to Bihar and West Bengal as has been provided in the case by the Government of India, as has been provided in the case of Andhra Pradesh. As regards Andhra Pradesh and Telangana, the government is committed to comply with all legal commitments to these states at the time of reorganization. In spite of large devolution of states to the states, which implies reduced fiscal space for the center, in the same proportion, we are committed to the welfare of the poor and neo-middle class. Keeping this in mind, adequate provision is being made for schemes for the poor and disadvantaged. Illustratively, I have allocated 68,968 crores to the educational sector, including midday meals, 33,152 to the health sector, 79,526 crores to the rural development activities, including Manrega, 22,407 for housing and urban development, 10,351 for women and child development, 4,173 for water resources and Nemami Gange. The significant sums will be spent by the states on these programs will be ensure that the quantum of leap in expenditure in these areas. I urge the states to utilize their enhanced resources effectively in these areas. Madam Speaker, I am delighted to report a good progress of DMIC corridor on the Ahmedabad-Durera investment region in Gujarat and the Sehendra-Bidkin Industrial Park near Aurangabad in Maharashtra are now in a position to start work on basic infrastructure. In the current year, I have earmarked an initial sum of rupees 1,200 crores. However, the pace of expenditure picks up. I will provide additional funds. Defense of each square inch of our motherland comes before anything else. So far as we have been dependent on imports with attendant unwelcome spin-offs, our government has already permitted FDI in defense so that Indian-controlled entities also become manufacturers of defense equipment, not only for us but for export. We are thus pursuing the Make in India policy to achieve greater self-sufficiency in the area of defense equipment, including aircraft. Members of this august House would have noted that we have been both transparent and quick in making defense equipment related purchase decisions. This year, keeping our defense forces ready for any eventuality. This year, I have provided adequately for the needs of the armed forces. As against the expenditure of the current year at 2,22,370 crores, the budget allocation for 15-16 is 2,46,727 crores. While India produces some of the finest minds, including international finance, they have very few avenues in India to fully exhibit and exploit their strength to the country's advantage. GIFT in Gujarat was envisaged as an international financial center that would actually become as good an international center as Singapore or Dubai, which incidentally are largely manned by Indians. The proposal has languished for years. I am glad to announce that the first phase of GIFT will now become a reality. Appropriate regulations will be issued in the month of March. For the resolution of commercial disputes, the government proposes to set up exclusive commercial divisions in various high courts in India based on the recommendations of the 253rd report of the Law Commission. The government proposes to introduce a bill in Parliament after consulting stakeholders. Madam Speaker, the government will, during the course of this session, also place before the Parliament required bills to convert ordinances issued by the government into acts of Parliament. I will now turn to the budget estimates for the year 15-16. Non-planned expenditure estimates for the year are estimated at 13,12,200 crores. Planned expenditure is estimated at 4,65,277 crore, which will be near to the RE of 2014-15. Total expenditure has been estimated at 17,77,477 crores. The requirements of expenditure on defense, internal security, and other necessary expenditures are being provided. Gross tax receipts are estimated at 14,49,490 crores. Devolution to the states is estimated to be at 5,23,958 crores. Share of the central government will be 9,19,842 crores. Non-tax revenues for the next fiscal are estimated to be 2,21,733 crores. With the above, the fiscal deficit will be 3.9% of GDP and revenue deficit will be 2.8% of GDP. Madam Speaker, I now turn to my tax proposals. Taxation is an instrument of social economic engineering. Tax collections help the government to provide education, healthcare, housing, and other basic facilities to the people to improve their quality of life and to address the problems of poverty, unemployment, and slow development. To achieve these objectives, it is our endeavor in the last 9 months to foster a stable taxation policy, a non-adversarial tax administration. A very important dimension to our tax administration is the fight against the scourge of black money. A number of measures have already been taken in this direction. I propose to do much more. We need to revive growth and investment to ensure that more jobs are created for our youth and benefits of development reach millions of our people. We need to enable tax policy for this. I have already introduced a bill to amend the Constitution of India for goods and services tax in the last session of this August House. GST is expected to play a transformative role in the way of our economy functions. It will add buoyancy to our economy by developing a common Indian market and reducing the cascading effect of the cost of goods and services. We are moving on various fronts to implement GST from next year. We need transformative piece of legislation in indirect taxation and transformative measures in direct taxation. The basic rate of corporate tax in India is 30%. The rates prevalent in other major Asian countries, making our domestic industry uncompetitive. Moreover, the effective collection of corporate tax is only 23%. We lose out on both counts. We are considered as having a high corporate tax regime, but we do not get that tax due to excessive exemptions has led to pressure groups, litigations, and loss of revenue. It has also given room for avoidable discretion. I therefore propose to reduce the rate of corporate tax for 30% to 25% over the next 4 years. This will lead to higher level of growth and more jobs. This process of reduction has to be necessarily accompanied by rationalization and removal of various kinds of exemptions and incentives for which incidentally account for a large number of tax disputes. I wanted to start reduction of corporate tax and the phased elimination of exemptions right away. But I thought it would be appropriate to advance notice of these changes start from next financial year onwards. Our strategy is to avoid surprises and instability in tax policy. Exemption to individual taxpayers will, however, continue since they facilitate savings and get transferred to investment and economic growth. While finalizing my tax proposals, I have adopted certain broad themes, which include measures to curb black money, job creation through revival of growth and promotion of domestic manufacturing and make in India, minimum government and maximum governance to improve the case of doing business, benefits to middle-class taxpayers, improvement of life and robust health through Swachh Bharat initiatives, standalone benefits to the economy. The first tax proposals is to effectively deal with the problem of black money, which eats into the vitals of our economy and society. The problem of poverty and inequity cannot be eliminated unless black money and it's dealt with effectively. And in the last 9 months, measures have been initiated. A major breakthrough was achieved in October 2014 when a delegation of the Revenue Department visited Switzerland and Swiss authorities agreed to provide information in respect of cases independently investigated by Income Tax Department, confirm the genuineness of bank accounts and provide non-banking information, provide such information in a time-bound manner, commence talks with India for automatic exchange of information between the two countries at its earliest. Investigation into cases of undisclosed foreign assets has been accorded the highest priority, resulting in detection of substantial amounts of unreported income. For strengthening collection of information from various sources domestically, a new structure is being put in place which includes electronic filing of statements by reporting entities. This will ensure seamless integration of data and more effective enforcement. Tracking down black money and bringing wealth back to wealth which legitimately belongs to this country is our abiding commitment. Recognizing the limitations under existing legislation, we have taken a considered decision to enact a comprehensive new law on black money to deal with monies which are stashed abroad. To this intent, I propose to introduce the bill in the current session of Parliament. With your permission, Madam Speaker, I would like to give some highlights and key features of the proposed bill. Concealment of income and asset and evasion of tax in relation to a foreign asset will be prosecutable with punishment of rigorous imprisonment up to 10 years. This offence will be made non-compoundable. The offender will not be permitted to approach the Settlement Commission. Penalty for such concealment of income and assets will be at the rate of 300% of the tax shall be levied. Non-filing of return or filing of return with inadequate disclosures of foreign asset will be liable for prosecution and punishment of rigorous imprisonment up to 7 years. Income in relation to undisclosed foreign asset or undisclosed income from any asset will be taxable at the maximum marginal rate. Exemption or deduction which may otherwise be applicable in such cases shall not be allowed. Beneficial owner or beneficiary of foreign asset will be mandatorily required to file a return even if there is no taxable income. Abettors of such offences, whether individuals, entities, banks or financial institutions, will be liable for prosecution and penalty. Date of opening of foreign account would mandatorily be required to be specified by the assessee in the return of income. The offence of concealment of income, of evasion of tax in relation to foreign asset will be made a predicate offence under the Prevention of Money Laundering Act. This provision would enable enforcement agencies to attach and confiscate unaccounted assets held abroad and launch prosecution against persons indulging in laundering of black money. The definition of proceeds of crime under PMLA is being amended to enable attachment and confiscation of equivalent asset in India where the asset located abroad cannot be forfeited. The Foreign Exchange Management Act is being amended to the effect that if any foreign exchange, foreign security or immovable property situated outside India is held in contravention of the provisions of the Act, then action can be taken for seizure and eventual confiscation of assets of equivalent value in India. These contraventions are also being made liable for levy of penalty and prosecution with a punishment of imprisonment up to 5 years. With regard to curbing domestic black money, a new and more comprehensive bill, Benami Transaction Prohibition Bill, will be introduced in the current session of Parliament. The law will enable the confiscation of Benami property and provide for prosecution, thus blocking a major avenue for generation and holding of black money in the form of Benami property, especially in real estate. A few other measures are being proposed in the budget for curbing of black money. The Finance Bill includes a proposal to amend the Income Tax Act to prohibit acceptance of an amount of advance of rupees 20,000 or more in cash for purchase of immovable property. Quoting of the PAN number is being made mandatory for purchase of any sale exceeding a value of rupees 1 lakh. The third parties reporting entities would be required to furnish information about foreign currency sales, cross-border transactions. Provisions are also being made to tackle splitting of reportable transactions. To improve enforcement, CBDT and CBEC will leverage technology and have access to information in each other's database.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.